Let's check in with our reporters now to take a look at what they were observing at the close. Abigail, what about you?
Well, Scarlett, stocks, of course, did fall on the close here, but on the week, the third up week for the S&P 500 in a row. And this chart, this longer-term chart going back to 2011, may suggest that there could be more gains ahead. We see a beautiful uptrend of the bull market. There are areas of consolidation, though, where the buyers weakened, the sellers tried to press down. But all along, for the most part, the 40-week average in blue did hold, with the exception of 2016 and 2011, when the 200-week moving average, was hit, and then up and away after the presidential election. Last year in the volatility, of course, a similar pattern. Right now, we're looking at an area of consolidation that's starting to break out to the upsides there. It's pretty amazing. The index is technically confirmed for about 3060. This chart could suggest, though, that the gains could even be greater, whether it's central bank accommodation or some other factor that the investors may get excited about, climbing the wall of worry. This chart is bullish for the S&P 500, Sarah.
Abigail, well, what was amazing to me this week was that everything except for the U.S. dollar was pretty much rallying together, from stocks to bonds, oil to gold, and it was forceful too. Now, this is a pretty rough proxy because it'll just give you an average, but I want to show you the extent of the strength that we really did see across asset classes. What you're looking at is an equal weighted index that looks at the S&P 500, the ag, also WTI crude oil, and then gold prices. As you can see, this week we saw an average combined rally of 4%, and that is the strongest everything rally that we have seen since back in 2011. Now, yes, much of this comes from a 10% rally in oil, but Sundial Research looked into what typically happens after we see everything rallies of this sort, and they found that, in fact, 70% of the time over a 12-month span, the S&P 500 is actually higher with a median gain of 8%. So bodes well potentially going forwards. Emma.
Of course, one asset class not taking part in the everything rally is, of course, the US dollar, falling for a fourth straight day and headed to its biggest weekly loss in 16 months. Take a look at this G chart. We'll show you how the dollar has fallen below two key levels of support, including the 200-day moving average, a very bearish signal. Also, the dollar ending the week lower against its G10 counterparts, the euro, the biggest winner there. And of course, remember that Sarah's everything rally fueled in part because of the weakened dollar.